as well, which is leading to that fall in the stock price. But it's important to discuss markets today, the fundamentals going ahead as well. Deepak Jasani of HDFC Securities is joining us now. Mr. Jasani, good morning. Thank you for joining in. Well, do you think we are in the last leg of the correction that we've been seeing, or there is more to go? How have you looked at the earnings so far this quarter?
Good morning. Now, the downtrend in the market today is a little bit sharper than what most would expect. But I think there are a few reasons for it. One is that over the last few days, chances of Harris in the US elections have gone up. So some people consider it as not very favorable for India. Secondly, the results season is more than halfway through. So going through whatever results have come in, I think we will end up with a 15 to 17 quarter low growth in the earnings, mainly driven by commodities, metals, cement, oil and gas, etc. So in that sense, there is a disappointment in terms of results. There was not very big build up ahead of the results, but I think the actual results are slightly worse than expected, especially the broader market results. So those things have combined together to sort of create some sort of a nervousness in other markets, and that is why we are seeing this weakness. Now, this could continue till the US elections are out of the way. So maybe a few more days of soft markets going ahead. Once the US election results are out, I think markets will bounce up. To what extent will depend on the outcome, and by that time we will have the US Fed meeting outcome also in place.
Deepak, thanks. You make a good point over there in terms of expecting further earnings cuts. But to take your mind to one specific sector today that's seeing quite a bit of a sell-off, that's the auto pack. Auto pack Q2, you've seen quite a bit of margin moderation coming in, especially when you're comparing it to what the street was building in. And how are you viewing demand at the current point of time? And do you think at this point of time, auto stocks can be looked at?
So we had the auto monthly numbers over the last 1 or 2 days. So basically, the wholesale numbers have been quite good, in line with most expectations. But what is important is to look at the retail auto numbers. That we will know in a couple of days' time as to how much inventory the dealers have been able to offload. And so that will give us an indication. The festive season started a bit subdued, but I think over the last 8 or 10 days, there has been a pickup in auto sales at the retail level. But once we know the actual numbers, we'll have a firmer view on the auto sector. For the moment, I think two-wheelers have been outperforming so far because of the lower base. Now their growth will also sort of moderate, and one will have to sort of refocus on the PV side going forward.
One sector which is an outlier today, Deepak, is this pharma API or the chemical space. At least the chemical space has been under a lot of pressure in the last couple of quarters. This time, some of them have reported good numbers. The commentary has been that maybe second half could be better. Do you think this could be the start for a bull run for the chemical space at least, or some of these API plays?
So we are more comfortable with the API space than the chemical space at this point of time. Now, chemicals there has been some sort of a recovery or bottom formation we have seen in the last month or so. But still the uptick in the prices and the offtake is yet to be observed or noticed. So that may take some more time, I think. We will have to watch out as to how the Chinese stimulus measures result in reinvigorating their economy. So in case Chinese economy starts reviving fast, then probably chemical sector can have a look. One can have a look at the chemicals companies also. But till that time, I think between the two, I think we will prefer the API ones.
Okay, Deepak, and what is your view on the FMCG space, consumer staples at this point of time? Names like Dabur, etc., reported a very weak quarter. Do you think this particular inventory correction, the company took is a one-off, or do you think there is some more pain as far as the FMCG names are concerned?
So as far as FMCG companies or their sales are concerned, there are a few things to consider. One is that the urban consumer is becoming much more health conscious in terms of the ingredients which are being used in the products. But the large companies are still not responsive enough to the demands of the urban consumers. So, and the urban consumers have a lot of choices in terms of availability of regional brands which are available online. So there is the young generation is willing to switch. There is not much of a brand loyalty. So that the larger companies will have to sort of realize that, and we can cater more towards better, healthier products. And so till they do that, I think they will see volume growth being very muted. And we have the urban demand has been a little sluggish in the last quarter, but this is one of the reasons that the regional brands are gaining at the cost of the national brands. Rural recovery, there are initial signs of rural recovery. If we see momentum there, then probably this FMCG stocks can be looked at favorably.
And what about consumer durables, names like Voltas, Havells? Do you like any of them, especially the AC makers?
See, the peak season for ACs is behind us, but at the same time, AC consumption continues through the year as far as the replacement demand is concerned or new real estate properties are concerned. So in that sense, having said that, I think the valuations of the consumer durables currently don't support a large buying interest.
For the sake of ourselves, at least, we shouldn't be using ACs in November and December. It's different for the companies that sell it, of course, Deepak. By the way, some of these stocks are at the day's low as we speak. IOC, Vodafone Idea, Sun Pharma has further seen a cut there. There's BHEL, BPCL, AB Fashion and Retail. All these stocks are lower in trade as we speak. Deepak, coming on the oil marketing companies, there was a phase where the street liked them for a long period of time, and now Q2 earnings have been very weak. There have been LPG under recoveries, there have been marketing losses. Now we are heading into state elections, but of course there have been no cut in fuel prices as yet. How do you look at this entire space? What about valuations?
See, the oil marketing companies are typically deep value stocks normally in a normal scenario. Currently, we have seen a large brokerage house coming out with a negative view on oil marketing companies a couple of days back. And that is why some of the sell-off today may be attributable to that. Otherwise, I think when the crude prices are on the way down or they are subdued, even the refining margins stay low. So till the refining margins go up and the marketing margins remain protected, I think the buying interest in these stocks will remain limited. Of course, these stocks they give good dividend yield. So in that sense, for people who are not looking at growth, they will be safe havens for the time being in case the markets continues their fall. But otherwise, I think they will have to fall to a much attractive level for people to sort of look at them very closely.
Thank you so much, Deepak, for joining us and giving us your view on a whole host of sectoral indices. Markets continue to remain under quite a bit of pressure. But one